This girl has to go for this at this moment. This is what the
Hey,
payment
hello
has to be.
everyone. Very good afternoon. My name is Ravi Badama. Thanks for joining today. I am the founder of StartupYo. StartupYo is a platform to help small businesses to start them successfully.
You tell him live not
Uh, I think people are
started.
joining, so I'll just take a minute and then I'll start talking. We'll just take 1 minute and then we'll start off.
This will be recorded, huh?
Very good afternoon once again, everyone. Thanks for joining today. My name is Ravi Budama. I'm the founder of StartupYo. StartupYo is a one-stop solution to start your business successfully. We are helping small and micro entrepreneurs to start their business successfully by connecting every resource that is needed to start their business. www.startupyo.com. So, and we are doing this series, Churn and Burn series, along with Mr. Nilesh Desai. He's the director of SME analytics. They are working to make the MSME more powerful and more stronger. So he will explain you what they are doing right now. And as part of this series, today the seventh episode is. Hope you all, some of you have already followed our previous sessions. So if any of you missed, so you can check out our channel. Today's topic is about the finance. You all know how important the finance in the business. So the finance, the pillar of strength. That's what Mr. Nilesh is going to talk about today. So please keep your questions related to finance and drop it in your comments. I'm going to take the questions after this Nilesh presentation. Thank you so much, sir. Thank you so much for joining today. Please take it up. It's all yours, sir.
Thank you, all the participants. Welcome to this webinar about churn or burn series. My next book is on churn or burn, which is indicating the general problems what is faced by MSMEs and the attention. And this idea of this book is to give you a thinking okay, what you can correct. It is a self improvement kind of thing. It will, after the about 16 webinars, it will come out. The book will come out after this. So we have already done a lot of research. And let me explain that our SME analytics is basically trying to help you increase your operational efficiency by analyzing your balance sheet and profit and loss, which can give you 52 various indicators. Generally, at the end of the year, we go to our chartered accountant for understanding our tax obligations, as well as if we have taken a bank loan, we'll go to the bank and asking for adjustment in additional loans and things like that. But many mistakes we are doing in handling our own finances. So today I'm going to talk about various things in finance. See, importance of finance for MSME is the basic idea. Everybody says that finance is a necessity to grow the day-to-day operations. It is true, but unless until you plan properly, you will not be able to grow your machinery, that is MSME, labor, other things. So this, the importance of this is financial plan is very important for the long-term growth of MSME. The small and medium enterprises are usually occupied with day-to-day activities, and they rarely get time for planning long-term goals. However, for the day-to-day survival, finances are the most important thing. Starting with a business plan and project report, it has some step which everyone should be focused into. See, most of the people in early 70s and 80s, they have started their enterprise without even preparing a business plan and a project report. Once they wanted a bank loan, they have prepared a project report with the help of some consultants. They did not understand their own merits and demerits of their own. I need 10 lakhs, so ask the consultant to prepare a project report for 10 lakhs or 100 lakhs, like that. So it is necessary now also. It is not too late for my friends who are running the industry. Try to redefine a problem statement. What is the source of problem customer is facing? Today, everybody says customer is the king. But are we understanding his pain point in detail, and are we working out what is the kind of solution which he is looking for? That second line is search for the solutions, brainstorm various solutions, next evaluate the best. Then next is execution of the solution. Then you will have to search out, okay, how do you execute? There are key partners and suppliers who can help you to come in that particular execution. And also you will be requiring key resources for development of a product or services. There will be some gaps in your thinking process or in your this thing, so you will be requiring help of consultant or various other resources, or nowadays online you have to do a lot of research so that the gaps can be narrowed down. Marketing and distribution channels, whatever product or services you are offering, you have to work out a detailed marketing and distribution plan, maybe in the phases wise. Then you will have to do customer segmentation. Suppose if you are having a food item, a food as a product, then you will have to look to your nearby, then Hyderabad, and then Telangana, like that. You will have to think of expanding, and you have to find out which are the possible customers which you are going to cater to. Then you will have to work on your risk analysis. This is very critical. Uh, Risk is to evaluate the risk. You will have to be clear what you want to do. You have to do the risk analysis of competitors, buyer, cost, new entrants, etc. So this evaluation will give you clarity of your thought. And this I suggest people, MSME friends who are already gone into, and they can again revisit this and develop a new strategies for growth. See, whatever you do, the one thing which will come out of this is budget, sort of a rough estimate. It is necessary for MSME to calculate their startup cost for number of reasons, like estimate their profit, do a break-even analysis, secure a loan, or attract a pool of investors or friends or relatives. Do a business startup plan. These are the necessary ingredients. Start with facility cost, which deals with locations like rental or purchase, fixed asset, materials and suppliers, other costs like accounting, license, permit, insurance fees, deposit, etc. Then employee recruitment and HR cost. Estimate monthly fixed and variable costs. Estimate monthly sales. Create a cash flow statement. Calculate project balance sheet, profit and loss statement for next few years, which includes probably your great growth aspiration also. Now, many people, many my MSME friends ask, what is the difference between accounting and finance? See, accounting is the record of whatever you have already done in the past, and what you are doing today. And finance is the link for your growth and all other parameters, which also, suppose if you have taken a bank loan, they will be reading your financial statement with a magnifying glass. If you want to exercise optimal use of company's resources, then it could be finance. If you want to take a detailed look at companies' books to see the resource utilized, then you are probably more interested in accounting. So these are giving you a broad picture, okay, where accounting is fitting and where finance is fitting. Accounting is the organization and management of financial information, where finance is the management of money, which can include future money also. Now, there are types of finances for MSME. Working capital loan, a diverse range of fund and non-fund based working capital loans make it easier for MSMEs to finance their day-to-day operation. Some of them are cash credit loan, bill discounting, bank guarantee, letter of credit, loans offered under credit guarantee trust fund of scheme. And this CGT MSME is up to 2 crores. Term loans. MSME seeks loan to meet their financial needs for capital expenditure and to purchase fixed asset. Then they must opt for a fund-based term loan such as secured term loan and credit guarantee (CGMT), which is offered by banks and NBFC. Uh, this also will come under 2 crore collateral free loan. There is a Mundra loan for a small a micro enterprise. Mundra loan is also available. It is in three form: Kishore, Sishu, and Tarun. So this loan is now that limit has been increased to 20 lakhs, and this is a guaranteed loan by credit guarantee, collateral free loan, and mm, the application for this is online, and the online form recently I did it for one of my known person, and automatically when all the data is given, they all declare the eligibility. Okay, this is the funding you can avail from this, and then you have to give a choice of the bank branch which is nearer to you, and you can approach that branch and avail the facility in a shortest possible way. One more thing is, now Credit Guarantee Trust Fund of India has also come out with pre-approved collateral-free eligibility criteria. So this also many banks earlier they refused to give funding under credit guarantee scheme. So now to avoid that, you can directly go to credit guarantee website and find out your eligibility like Mundra loan. So this is to cut one layer. Banks earlier used to make you to run around and then reject for silly reasons. Then there is something known as a composite loan, like SEED-B. SEED-B is a term loan institution, or you can say development financial institute, or MSME. They do not operate the working capital. So, but they can scrutinize your proposal, carve out the component of working capital, and IDBI Bank will come and manage your working capital this thing. So this is another facility which may be looked into. And when you want a bank loan, bank asks for a CMA data. Now, CMA data means credit monitoring arrangement, or CMA data is the financial report used by lending institution to analyze the financial position of a company before lending of the project loans, term loans, and working capital limits. So they understand what is your projections and what you want to do. So if you are a running business, they ask you for 2 years earlier data, this current year data, and 2 years projections, which they will give from where they understand what is your aspiration, what is your fund requirement, whether you require a short term fund that is increase in working capital, or you wanted a additional capex or additional machinery and other things to be you want it. The so Reserve Bank of India is mandated all banks to ask for CMA from borrower above certain limit. Hence, CMA gives a financial blueprint of a company's performance year on year to determine the overall financial health eligibility for loan repayment capacity, etc. Borrowers of the loan or owner have to prepare their own CMA data statement. This is my strong advice that any running MSME unit or who is going for fresh loan, they should prepare their own CMA data. Many things they will not be able may not be able to understand. There only they should take help of external consultant. Otherwise, you will be having a mismatch. What you are thinking, what your consultant is thinking. Consultant thinks from the how to get a loan from the bank, but you are the person, you are taking the loan, you are signing on dotted line all the documents, and when you don't understand your own projections, how do you expect the external consultant and bank to understand your own project this thing? The format of CMA data is generally fixed and it contains preceding 2 years actual performance, ongoing year estimated figure, and next 2 years projection. Profit and loss account to know performance of the company. It is helpful to know earning cycle for paying the expenses, cash flow statement, ratios analysis, balance sheet, this thing, fund flow statement, and these all will allow the bank to work out the maximum permissible bank finance for working capital uh, uh, limit and all that. This is a indication of uh, how much money is permissible to be given as a working capital for that particular year, which will come out of this all various this thing. As the business grows year on year, it becomes absolutely necessary for statutory requirement. Every business must have a profit and loss and balance sheet. By these eligible businessmen can file income tax returns and then can avail bank or NBFC loan if eligible. This can help them to 4 5 years projection of the yearly target. So when you know what your business is growing at 20% or 23%, and you have taken some additional initiatives, then you expect that with this new initiative, suppose you have taken a marketing manager, you expect because of marketing manager another 5% growth will come in a business. All that is required to be projected for next 3 to 5 years. So there is, you get a practical visibility what you are trying to do. Other things like direct expenses, gross profit, indirect expenses, net profit, I am not going in detail. It is available in my presentation. And now there is the importance of balance sheet. Understanding the balance sheet and profit loss and loss improves in growth of business. This many of my friends in MSM sector, they don't understand their own balance sheet. They don't understand profit and loss, and they go take risky decisions without understanding what is the strength of their balance sheet. So to avoid that, please try to understand your balance sheet and profit and loss. Ask your chartered accountant or consultant to explain and understand in detail. Say engineering graduates who have started this, they'll say that I'm an engineer, I'll not know. You are not only engineer, this is your enterprise. You have to see that you keep the repayment track. This thing nowadays, CIBIL and other things, if you are defaulting, it will be giving a negative marking, and you will not be eligible for your own growth. So you have to be very careful. And a balance sheet is a financial document generally prepared at the end of the year. In India, it is 31st March. Balance sheet gives an organized view of short-term debt, inventory or services you have purchased, accrued expense such as wages to employees, taxes that will soon become due. Balance sheet also outlines loan, cash, land, prepaid accounts, inventory equipment, and account receivable. that still needs to be paid for. That means you will, at the end of the year, some monthly expenses or something which is falling due after June or something, but the liability has arisen. So you will have to make necessary provisions in your balance sheet. It is an important tool used by banks and NBFC to understand the financial health and liquidity position of entity. See, you may be, some of you may have taken loan from NBFC. They ask for 3 years balance sheet. What do they with that 3 year balance sheet and profit or loss? They understand this, that your liquidity position and financial health of your company, and whether you will be able to take that additional loan liability, whether it will be serviceable or it will come into problem, or EMI will be paid regularly or not. This also, I would like all my MSME friends to understand that a balance sheet and profit and loss also gives you 52 various ratios which can improve your operational efficiency. In latter part of my speech, this will come again. Generally, the balance sheet asset and liability should be equal, because the balance sheet is preparing using double entry system of accounting, and this system serves as a kind of error detection system. So the equation must be asset equal to liability plus capital and net profit. Now, what are the assets? Non-current assets are long-term assets which will not be realized, settled within 12 months of the balance sheet. Current assets are likely to be used up or converted into cash within one operating business cycle, which is usually 12 months. These are cash and cash equivalent, account receivable, prepaid expenses, inventory, etc. Non-current assets are generally land, fixed machinery, and things which cannot be converted into cash overnight. See, suppose if I have taken a car on 3 years loan, then my current liability, what are the equitable installment I have to pay in this year, I should treat them as a current liability, so that I have to prepare in my projections or working capital that this liability is becoming due in next 12 in these 12 months. What is this? You remove this. Is the fund invested in a business by the owner of the business, and the net profit defined as profits of the enterprise coming from the profit and loss statement. At this point, I would like to make a difference between margins and capital and subordinate debt. Say, suppose one gentleman has worked in a corporate sector and had a saving of 10 lakhs, which is investing in the business. It is known as a capital. But he runs short of another 5 lakhs and he goes to a friend, and friend obliges him to give these 5 lakhs as and when payable. Then this is known as a subordinated debt. It is a liability, but it is a subordinate debt. When he makes enough profit, he has to pay that money back to that friend with interest or whatever is their understanding. But bank uses that you bring 25% margin. So what generally is, many of the entrepreneur goes, they go to their friend relatives and ask the money given in his personal name as a loan, and he brings in this money as a margin. So bankers are happy, uh, the consultants are happy. But the big problem is you have started a seed of sickness. because from whomsoever you have borrowed, you have got some commitment either to pay monthly interest or quarterly interest or yearly interest, which is not coming in the main company's this thing. It is coming in your personal account, and which to service this, the whether combined balance sheet of a person and this is taking that load or not. Many entrepreneurs don't understand. Sir, I brought 10 lakhs margin required by me, but he fails to understand that these 10 lakhs he has borrowed 7 lakhs from somebody to whom he has to pay monthly interest. So from where he is going to pay that monthly interest? These are the seeds for making your unit weak or sick. Now, coming back to, I said earlier that there are 52 ratios which you can get from balance sheet. Uh, Ratio analysis is a quantitative method of gaining insight into company's liquidity, operational efficiency, return on investment, and profitability by studying its financial statement. To all my friends in MSME, I would like to ask one question. Why did you start your enterprise? If you say that I have started to earn more money, then the first criteria you should understand is what is your return on investment. And very few friends of mine in MSME, they are bothered about ROI. They say that my liquidity is good, my asset creation is good, and all that. But return on investment, recently I came across one of my friend's balance sheet. He is doing 23 crore business, and 2 crore is on capital, and he is making 5% return on investment. And I have to shout at it. You put this money in the bank, 2 crores, go to Switzerland and enjoy there, because why are you working and taking this load? You can earn 15 lakhs or 20 lakhs from the bank deposit. Practically safe investment. So many of my MSME friends, they are not bothered about the return on investment. I would suggest that everybody should understand what is the return of investment, what they are getting. Now, these ratios can be classified into 4 or 5 major groups, which is connected with your business in day to day and long term. So, one is the liquidity ratio. That liquidity ratio is a current ratio, which means current asset divided by current liability. For a normal purpose of a healthy business, it should be 2. When you have taken a bank loan for working capital, and bank will be happy to say that 1.33% I am happy with. Did you understand that bank is expecting to earn regular income by interest from you for future years? So they are ready to take this thing, and they are not classifying that working capital loan as a current liability. That is a mental comfort they are giving to you. But if you misutilize that, you are in a big problem. So try to maintain your current ratio uh, approximately healthy to 2 level. That means current liability is how much divided by current asset divided by current liability should be near 2 always. So that gives an indication. Okay, suppose if you want to buy land or further machinery, and if you are taking out the money from the liquid assets and put it there, you are heading for a trouble. I will be coming back to that topic in the next slides, next 1 or 2 slides. Then there is a leverage ratio. Generally, bank asks, give me your DSCR, debt service coverage ratio. Compares a business level of cash flow to its debt obligation. DSR that is greater than 1 indicates that the business has enough income to comfortably cover loan principal and interest payment. But banks are more comfortable when this ratio is tending to go to 2.3, 2.5, 2.7 in the latter years, when if you have taken a term loan. That is indicating that your future cash flow, because first 1 or 2 years of your term loan, you may not be able to generate enough cash, and you there will be a problem in servicing the long term debt. So that is why you have to ask the financing instrument properly. Sir, I may not be able to pay, I want a moratorium of 2 years to start my payment, repayment of the term loan. You should understand, and this can come out clearly from your balance sheet. Then debt to asset ratio, interest coverage ratio, you can go through that. Then comes the efficiency ratios. See, any business has to work efficiently. If their efficiency is low, these all ratios will go bad. So there are certain ratios which can indicate. One of the important ratio is asset turnover ratio, is an indicator of the efficiency with which a company is using its asset to generate revenue. And about 3 weeks back, we had a webinar on idle asset. This is one of the thing which, if you have got an idle asset, your asset turnover ratio will be going down. So you be careful about using your idle asset. Also liquidate, or use alternatively, but don't keep idle asset. Inventory turnover is a ratio showing how many times a company has sold and replaced inventory during a given period. It helps to make better decisions on pricing, manufacturing, marketing, and purchasing new inventory. A low turnover implies weak sales and possibly excess inventory, while a high ratio implies either a strong sales or inefficient inventory. Then there is a account receivable ratio and account payable ratios. See, yeah, well, you generally say that, "Ki bhai, I'll give you 30 days credit," and that customer has paid 45 days. You will be patting your back and say that this customer is good, but you have failed to understand in pricing. This 15 days interest and other costs and cost of opportunity has not been priced in your sales price. And suppose if you take at the end of the year, I have given everybody 30 days credit, but at the end of the year you find that this credit is 60 days, because there are some people who are in a bad debt or a very slow payment. So this increases your cost of paying interest and other things. So similarly, account payable also, most of the MSME enterprise do not bother about paying their suppliers in time, saying one bahana or second bahana. See, your reputation is in the market depends on your payment habits, and you have got only one bank, but you have got thousands of suppliers who can give you credit if your payment habit is good, and they don't want your balance sheet to finance you. They understand your behavior, and you don't know, if you are not paid somebody in time, he may tell 10 people without your knowledge. So be clear, be sharp, and see how you can make these two ratios. This is also indicating your behavior of your psychology. Many entrepreneurs, they have got liquidity in the bank, but they try to play with the supplier sentiment. Kal aa jao, parso aa jao, narso aa jao. He does not know it harms. So please maintain discipline. Then return on asset, return on equity. Return on equity, earlier I said ROI. This is what is many very critical this thing. Then gross profit margin and net profit margin. See, if you file your income tax returns, now because of this scrutiny, they only select 3 or 5% returns for scrutiny. What happens to other 95? If your gross profit margin in last 3 years and the net profit margin are in practically line, they try to neglect that because it is a standard business. So trying to have the net profit, gross profit in a reasonable short bracket, you will avoid this, and that will also give you indication that how to control your operational expenses and net profit expenses. There are not net profit. There are a lot of expenses which are not in manufacturing side. So that also is a playing critical role. And uh, uh, one of my friend, I studied his balance sheet for 3 years, and I said, "Ki bhai, your current ratio has improved considerably in 2007, but what where it has harmed in 2017 is return on investment has declined. So every ratio what you have got has got a connection somewhere which you may not be knowing. So this is very critical, and this thing. And now I will come back to intangible assets. Every MSME unit has got a intangible asset which they may be aware or they may not be aware. Intangible asset has no physical presence and improves a small business long-term worth. That is what I was talking about, reputation management. They have some value because a business has sole legal or intellectual rights to them, and they can help buy back destroyed tangible assets like equipment, land, etc. Intangible assets also improve the value of other assets, and it will create valuation for the equity. Generally, MSME unit, we don't have a equity. We say it is our capital, owner's capital. But suppose now government of India has come out with a scheme of fund of 50,000 crores, and if you are in the turnover range of 50 crores or to 250 crores, they will try to give you equity kind of support so that you can grow at a faster rate. They are interested in a fund of fund. It's a mother fund and a daughter fund, which has yet to be announced. Though in Atmanirbhar Bharat they have announced a scheme. So some of the items that are considered as a intangible asset, technology, like technical manuals, engineering processes, computer software, are all intangible assets. Contracts, finances, license, and permit. Say McDonald finances, who has taken a franchise. Uh, do you think he's selling on his own, or he is selling on the franchise right what he is using? This is an intellectual property which McDonald has created. Domain name and brand equity, trained and competent workers. This is also very critical intangible asset. That is why many MSME people are not investing in training. I will advise strongly whosoever are healthy and can afford trained manpower in the age group of 18 to 45 or 50 are a very big asset to the running industry. Intellectual property is specifically created by individuals and protected by laws from being stolen. The trademarks, service marks, copyright, and patents. Today, only one of my uncle got a patent for a research he was doing for last 7 8 years on water field. Customer relationship. A repeat customer has got a different value than one time customer. Employees contract, company reputation including goodwill, trade secrets, brand recognition, proprietary business processes, marketing, advertisement campaign, and material. Location related asset like land, water, and mineral rights. Suppose if you have got a land in a prime location, the value goes up for you. You are not going to encash that land value, but the valuation it goes up. The use of short-term fund for long-term use. Many of my MSME friends, they do not understand the difference between short-term funds and long-term funds. Suppose you have generated 10 lakhs profit in this year, and next year your business is expanding by 25%, so you will be requiring additional margin for your working capital requirement, assuming that bank is going to give that 75%, and this 25% you have to bring out from these 10 lakhs. But he thinks I have made 10 lakhs, let me buy a house. Then he gets into a problem of running short of a working capital when business requires most. Sometimes he may have to compromise from a profitable contract because working capital is not there. So you have to be very critical. Your profit is your margin, your own money. You can use the way you like. But if you want to grow your business, this is a must. I have seen in my 39 years, many businesses have closed down because they made bumper profit in 1 or 2 years, and then they have expanded without proper working capital requirement assessment, and they have been duped. They have constructed very big factory sheds worth of uh, 1 or 2 crores, not taking a long term loan. They have invested from their own funds. I know one casting unit. They have expanded, and the next expansion plan was costing 11 crores, and they went to the bank and they asked for only 5.5 crore, thinking that which will help them to reduce the interest cost. Theoretically, they are right, but today ultimately they have become a sick unit, and last 5 7 years they are struggling, and there is no clarity whether they will come out or not. So please be sure, don't divert short term funds for long term finances. Make your assessment properly. Take help of somebody. Your own fund flow statement, cash flow statement gives a enough warning to you to see that ke bhai, when you will come in a danger zone. And whenever some urgent basis you need, there are you can go to your bank or you can take help of your NBFC, but try to buy long-term asset with the long-term fund. It can be your own fund, but see that you don't deprive. Suppose if you expanded the machinery, thinking that out of this 10 lakhs I'll buy this machine, but you have not taken that machine also will be requiring additional working capital from other normal machine. And if you have not planned for this, you are heading for a doomsday. Cash flow and fund flow. Many of the my MSME friends don't understand the short-term cash flow projections, and they don't do this. This is a must. Every MSME unit has to do uh, practically calculations and see that they try to retain as liquid as possible so that day-to-day operations are not hampered. Similarly, fund flow statement also is helpful. Fund flow statements are used by banks in more predictive way because it gives a yearly fund availability. While cash flow you can work on weekly basis, daily basis, monthly basis, quarterly basis, or yearly basis. It depends on this. Again, one more advice to all my MSME friends: budgeting is a must. You should understand your capex planning and opex planning in as detailed as possible to get a clarity of your business. Uh, then Oh, sorry, I've taken longer time. Ravi, can we extend this for another 10-15 minutes? Last topic is cleaning balance sheet. Uh,
Yes, yes, sir. We can.
Cleaner
We
the
can.
balance sheet. Yeah, cleaner the balance sheet, you will get better rating from credit rating agencies and banks and other things. So don't try to make your balance sheet dirty. And now with GST and lot of integration coming from banks and income tax, your playing around with the balance sheet is going to be reduced. So start planning for keeping your balance sheet as clean as possible. I think I will end with this. I will not go with this thing that is available in the this thing. We'll load it in also in next tomorrow or day after tomorrow. Ravi, can we start question answer? I'm sorry, I've over shooted the time.
That's okay, sir. The topic is more important. We can take few more questions if somebody have. So that shouldn't be an issue.
Yeah,
Thank you so much, sir. It was
yeah.
so insightful. I mean, it was with a lot of information. Uh, I'll start with the question, sir. Thanks, Amulya, for the first question. How to calculate the payback period and how it can be useful?
Amulya, you are being a PhD in finance. You are taking my exam or what? See, payback period depends on the depreciation and other things which are very critical. And you being a finance professional, I think you are taking my exam. And there are complicated formulas uh, which are available, and it is very easy to take a standard this thing and work it out. Suppose if you are acquiring a capital asset and with enough working capital, what is your profit coming out of that machine, which you can count and then combine how much improvement it will be doing. That is one of the formula which is useful for a small scale industry. I hope I
Thanks.
answered Amulya clearly.
Yeah, sir, I have another question from Shravan. What is the difference between the gross margin and markup?
Generally both are similar, uh, uh, and markup is generally what is the value addition you are getting for a product, and gross margin is derived after taking manufacturing expenses to consider. So generally both are practically similar.
Oh, okay. Fine, sir. Thanks. Uh, I have another question from Manjula. What is the day sales in accounts receivable ratio?
See, generally, account receivable ratio is worked out from the total sales uh, divided by number of days. So that will give you okay how much money you have to receive. And if you keep a tab on receivables, that means you are faster on your collection of the money. And as you are collecting from your customer, you will be faster on paying it. See, ideal cases are commodity market. Commodity market, the funds are rotating absolutely fast and at a very thin margin, like gold, cotton, all other commodities. Very thin margin will be there, and that is moving at a very fast speed. So same money you are using for normal manufacturing, they will be looking for 4 to 5 times inventory turnover. Here, inventory turnover can be 100 times or 120 times in a year.
Okay, thank you, sir. So there is another question from Mohammed Imran.
Question.
What is the difference between accounts payable and accrued expense payable?
See, account payable means you have taken a credit from some suppliers on some item on credit, that is the what you have to pay. And what is the other part?
Accrued
What is,
expense.
say, suppose you have got 20 employees, every day they work. There is a liability which is coming up every day, but you pay on 7th of the month or next 8th of the month or whatever date your normal salary payment days, or you have to pay rent or monthly rent or thing like that. That is overdue, but generally payable by 7th or 10th of the next month. So you can make a provision for creating that in your balance sheet, that this is a liability which I have to pay in near future. I hope I answered your question, Imran.
The next question is from Paripurna. What is the accounts receivable turnover ratio? How will it be useful?
See, whatever money you have to get from your customers divided by 365 days into average collection, average outstanding, what you have to get on particular day, that will give you okay, how fast you are collecting your money from your customers. And if you control that, you will be collecting your money reasonably faster by putting little extra effort. Or if you know the customer's behavior, that he is say 30 days but pays in 90 days, your pricing can improve. This is the utility of that ratio. Thank you, Paripurna.
Thank you, sir. I have a question from King Lion. What is the tax advantage when bonds are issued instead of stock?
A very good question. Uh, See, stock is in a capital side. So when you make some money, you have to pay dividend and other things. But when you issue a bond, you are committing the interest payment, and it will go to your profit and loss account, while equity will go to your balance sheet account. So that is the difference. And uh, interest is deductible in your profit and loss account, while dividend is after issuing the bond. So dividend or equity is generally costlier than raising the bond, but it depends on your daily workout. And most of my MSME friends, they do not look into debt equity ratio very critically. Thank you.
Thank you, sir. I have another question here from
Can we go to
Amulya.
next?
What is the Yes, sir. The next question from
Ravi?
Amulya.
Hmm.
What is financial leverage? Can you explain in detail?
See, uh, financial leverage is how efficiently you can use your equity to leverage to get more debt. And for health of the business, generally you should have 1 to 1.5 to 1 for corporate sector, and 3 to 1 for MSME. So MSME requires a little lower equity contribution, but and in corporate sector 1 to 1.5, one equity, there will be promoters equity, then investors equity, public issue, all that which will come. That leverage is not available for MSME, because generally they'll be funded by their own equity or close friend and family and friends. So MSME does not have that advantage in a very small range, up to say, you can say up to 15-20 crore turnover. That leverage is not there. So my advice to all those people who have reached 15, 20 crores should look into leverage their business and try to go up to 50 crores or 100 crores by listing them on a stock exchange. So your 10, 15, 20 years efforts which has given you this reputation and equity, you will be getting premium possibly from the market, which will generally reduce the cost. If you take Reliance, number of issues which has come from 1977 and onwards, every time they went on increasing the price of premium, and that premium money they have gone for which they don't have to service. And today where Reliance is, it's an example for everybody. And also when you list your stock, it is practically a currency for you to raise further money. If you are listed today, a small entity will not be able to get further funding, but a promoter of the group can place some shares for getting the money from various other sources, including banks and other things. It can be leveraged. So that is the thinking which a number of MSME who are in the range of 20 crores and above, even 10 crores, but in technology they can look into for encashing this. Thank you, Amulya.
Thank you, sir. Thanks for the detailed explanation. Uh, I have another question from Paripurna. If I want a gross margin of 25%, what percent should I mark up on my product?
See, this is a very competitive market. So you will not be able to charge extra margin to a customer. So please understand your product before going into that line. See, 25% gross margin are available in a lot of technology companies where they are dealing with lot of technology. Even proprietary item, you will get higher margins. But you have to look into your individual product or service what you are offering. And if you are in a manufacturing sector, forget about 25% gross margin. You will have to use various methodology to reduce your cost. Maybe lean manufacturing, maybe Z, or Industry 4.0, automation. Forget about those days of enjoying 25% margin when India was a India was not competitive 20, 30 years back. Only two car manufacturers were there. See, now every 10,000 rupees price point, better and better vehicles are available. I hope I answered your question.
Yeah, thank you, sir. There is another question here. What is the difference between vertical analysis and horizontal analysis?
Shravanji, I don't know what exactly is their meaning of this question. Vertical
Fine,
analysis is a
sir.
balance.
I'll ask him to retype it more clearly. I'll jump into the next question. Uh, what is the see? There is a what is the age limit for taking the MSME loan?
As far as I know, there is no age limit for MSME loan, but generally it should not be more than 65. There is nothing which is written. But generally, bankers will take precautions financing loan to elderly people.
Okay, thank you, sir. There is another question from King Lion again. How much reserve should I maintain if my business value is 3 lakhs per month? Business value is, I mean, something is difficult. Proper.
See, Mr. King Lion, you should understand your receivable position and payable position. For corporate sector, generally they try to keep 3 months expenses as reserve. But small scale industry, they have to depend on what is their monthly monthly collection and monthly payable, and they can determine. This is a case specific this thing. If you have got a sales turnover of 3 lakhs and you are in a job work industry where the labor cost is very high, your labor cost may be 1.5 lakh rupee. So it is advisable the payment habit of your principal and these also to be linked up. But it depends on case to case. It is very difficult to specify. Thank you, Mr. King Lion.
Thank you, sir. I have another question here from Sauradipa. What is the operating profit margin ratio?
See, operating profit margin is somewhere between net gross profit and net profit, which gives you a separation. See, you can the depreciation is a part of uh, net profit. So without, if you take out depreciation, whatever you get miss net profit plus depreciation will give you a operating profit margin ratio.
Thank you, sir. I have another question from Manjula here. How MSME can be helped with return on equity ratio?
Generally, MSME may not be having equity as a word in their balance sheet. It is known as a capital. And
Capital.
your net profit, what you get at the end of year, divided by your capital into 100 will give you a return on your equity. And see, in olden days when we do the pujas of books, now we computers will come. 20-30 years back we used to do puja of the book on either Diwali day or whatever day, and the first word when we write is Sri Sava. Sri is a Lakshmi and Sava is 25%, 1.25%. So they are asking God to give you 25% return on your capital. That is the thing. You are laughing because the books have gone out of the this thing, and this will be new
Understand.
to many people.
True, very true, sir. Good info. I'll jump into the next question, sir. Now, the question. Oh, sorry, I read it. The next question from Amulya again. What is the difference between the gross margin and the contribution margin?
Sorry, I don't know the answer because this comes on only on a corporate sector, MSME sector. I don't have much knowledge about contribution. This thing.
Okay, sir. Thank you, sir. I'll jump into the next question from Sauradepa. How women get the funding for startups?
See, there is nothing specific for women for startup. See, startup financing is totally different from MSME financing. MSME financing is generally done on debt basis, while startup finance is bank government
Equity.
facilitates your entry into this thing, and then angel investor and that kind of things comes. But now with venture miss the angel investor and this ecosystem is getting developed well in India, or it is or developing very fast. There are certain funds who have come to help only woman led startup, so that you can look into.
Thank you, sir. I have another question from Manasa. What is cluster financing?
Mansa, I am sorry, I am not very able to, I may not be able to answer this question.
Oh, okay. One more question from Manasa. Is credit rating important for MSMEs?
If you say, if you ask, I will say yes. because credit rating, apart from helping the financial institution like bank and NBFC to assess your credit worthiness, we have to imbibe the financial discipline in us, and this credit rating scores gives us that importance of this thing we neglect many times. uh, the data available with CBIL and all those people, because they've got data availability from various sources, and if you have to pay, say, some credit card bill of 10 rupees and which you are not paid for 2 years, uh, without any depth of understanding, they reduce your rating, and wherever you want a loan, it becomes difficult unless until you set at 10 rupees or 20 rupees, which you have neglected by mistake or overlooked or too small an amount. So that it is harming, and that is why the question which we are bothering for last 3 years, is credit rating important or is Z score important? Z score, we have made a video. People who can give their email address to Ravi or to me will send a video of that presentation. According to me, Z score is a better indicator for a financial health of the unit. Credit rating is from debt side, it helps you. I hope I answered your question.
Thank you, sir. I have another question from Paripurna. Uh, what are pro forma financial statements?
I think she has made performa financial statement. That means what you are
Oh, okay, pro
projecting,
forma.
and what you are projecting for your this thing, which may not be, which is a reflection of your thinking. Means you give your performa balance sheet or half yearly balance sheet. Generally, we don't prepare in MSME half yearly. So they ask for a whatever you are getting from your tele data or something, and that may not include some depreciation and other expenses, which comes at generally arrived at the end of the year.
Thank you, sir. I have another question from King here. Do you think MSME can compete with the corporate companies? If so, how? If not, why?
Very interesting question, King Lion. In one of the earlier webinars, it's a story of elephant and ant. Ant can go in the nose of the elephant and make that elephant dance. So, similar way, a MSME, because he can work out, he has got no restrictions like the what the corporate sector has got. That decision making is reasonably slow, while MSME can take decision faster, because it is one man enterprise or two man entrepreneur, a partnership enterprise, so they can take decision faster. uh, Coming back to competitiveness, it depends on the skill set of the entrepreneur. If you have got a skill set of automate or automize your business system and other thing, reduce cost continuously, uh, then why say today, if this COVID, lot of automobile companies were shouting, our supply chain has been disconnected. What is the meaning? They were depending on some small vendors somewhere in other areas where there is a lockdown. So MSME has got maximum flexibility for adaptability to the coping up with the circumstances, while corporate sector may not be able to change their track as fast as uh, MSME can do. Suppose if you take your street vendor is also theoretically MSME. When Diwali comes, he will sell crackers, and when uh, this Makar Sankranti comes, he will be selling kites, and he
Kites.
can change kites. He'll change his business 10 times, and when there is nothing, he will say papaya or some vegetable. He will not keep idle. So per square feet utilization of him is far higher than the you get in malls. That flexibility is available with him. I see lot of vendors taking Tata Ace and serving the food on highways. See, what does it? They don't have any fixed cost. They take one Tata S, put the idli dabba there and serve. So this flexibility is not with available with Krishna Oberoi or ITC Kakatiya. So, and you should have found out. See, today another video we are making is on SWOT analysis, and anybody who wants that, these are free. So you can ask Ravi. You can give your email address to Ravi or to us. We'll send that video to you. SWOT analysis is very critical for both small industries and medium corporate sector. Even to governments also, it is very critical. Thank you.
Thank you, sir. Thank you, sir. We'll take two more questions and then we'll close it,
That,
sir.
that that is
Uh,
more than.
yes, sir. And then there is a question from Dasarath. Worked with different MNCs. How can I get started an IT company, and how MSME will help me to go forward?
See, this is the question which I'm facing for last many years. Now you already acquired some skill, a specific skill in the particular area, either marketing or
Domain.
technology development or something. But other two which are critical, you have not gone in deep. So either learn yourself three, four functions: finance, technology, purchase,
Sales
sales,
and
uh, and all these human management. These are key sectors, and you may have acquired one or two skills. Remaining three skills may not be fine tuned. So please try to acquire that. Otherwise, I know many people who have worked for multinationals for many years in say marketing. They started this, and they are facing a lot of problems today because they did not have acquire other skills required for running any business. So please do short courses, EDP courses, or learn online. And this thing, up to 2 crore rupees, you also can avail a credit guarantees trust fund of scheme without collateral. So work out and apply for pre-approval of the loan from them. That will help you. Anytime you are welcome to come to my office or Ravi's office to discuss. We will help you out to crystallize your thinking.
Thank you, sir. It
I
was
hope I
very helpful. Thank you, sir. I have another last question. We'll take it up. What is the impact on cash flow and net income? From Ravi
very
Mantri is
interesting
asking.
question. Very interesting question. See, many people are having lot of assets, but it is in the form of land, and they don't have money to plant the seed or something. Can they prosper? Can they meet the
No,
day-to-day expenses? So this
no,
is the
definitely
challenge.
not.
Net income is, suppose you have to get 50 lakhs from BHEL. On the books you have booked already 50 lakhs you have to get, but BHEL is not paying or delaying the payment. So what will happen? They will come and go on strike. Cash flow is the king. Cash is the king. My younger son in Australia says cash have projected money for next 2 years in liquidity. Cash flow is very critical. I have emphasized earlier also in my presentation. And Ravi, if you have got some problem, you are welcome and discuss with us.
Thank
Thank
you,
you.
sir. With that, we will close it. I will. I would like to display our number, our StartupYo number, and the Nilesh Desai both number on the bottom. So you can read out. Yes, sir. You can talk. I'm just trying to explain. There's a number scrolling on the screen. You can reach us if you need any
Next
help
webinar.
to start your business,
Yeah.
or if you wanted any help, if you wanted to connect with Mr. Nilesh Desai, you can reach on that number. Thanks once again for joining. So, Desai will explain what will be the next session. So, sir,
Next webinar will not be on next Saturday because next Saturday is Diwali. So we'll have a next webinar on 21st November. The topic will
okay,
be human resources as a profit center.
wonderful, sir, wonderful. That will be a great
It will be
session.
on HRM and practices around human capital management and other things. So I request
Wonderful.
all the MSME friends who has joined today or who can they can spread this message to their friends and colleagues. Thank you.
Sure, sir.
And
Thank you so
anybody
much,
who
sir.
wants Z-score detail or operational efficiency, yeah.
Yeah, yeah, I'll explain, sir. So that's why I shared the numbers, direct
Thank
numbers,
you.
yours and our companies, so people can reach us for any kind of help to start the business. You can reach us if you need any resources to start your business, or if you need some help from Desai Garu in terms of SWOT analysis or Jet score. He will be able to help you. Please reach directly on his number. Thank you all once again. Thanks once again for joining. We wish you happy Diwali to all of you. So we'll not be having the next session
Thank
on
you.
next Saturday. So it will be on 21st. So we'll see you all on that day. Thank you once again. Have a nice weekend. Take care, all of you. Bye bye. Thank you, sir. Thank you once again for joining.